Well, okay. Good morning or good afternoon. So we had a little breakout action going on, and it caught me a little bit by surprise. Market blew past my level at 57.83, but then came back right to my level at 57.83. So you can see that there's nothing wrong with my levels. It came back to fill the gap of my level, not anything else. That's pretty cool. So let's examine what happened. This morning in the market, um, pre-market video, I pointed out that we had the R-vol inside the ones. Usually the R-vol is inside and outside the ones. It's very unusual for everything to be inside the ones. Even yesterday, the consolidation day, you still had the RVOL 2 and 3 outside the 1. So whenever it gets compressed like that, it's a rare pattern, and I walked you through the last time it happened. I scrolled through the chart earlier this morning to find a similar pattern where the 8 or the RVOL was all inside the daily ones, and it was January 10th. Let's go back to January 10th. Here it is, right there. So you can see it was exactly the same. And I even pointed that out this morning, that if we do get the breakout, it could be a big breakout day. And sure enough, today it was. Now it was a slow breakout. This candle here happened at 8 a.m. So, you had a lot more time to get down there. I mean, faster time to get down there because the 8:30 a.m. Um, happened on that hourly candle between 8 and 9. So today we were inside for a long time. It just drifted down here, took its sweet time, and I thought for sure it was going to go back inside. And so when it broke down, I was like, celebrating. Oh, there's my level. Look how good the Jats PT with the GEX and the open interest and everything. I even went back to Grok and yelled at it today by saying, you missed the 57.50 high, put. You didn't have that on our sheet today. And I'm a little bit disappointed that I didn't catch it and put it on the sheet. You have to be careful. The AI is not perfect. So it caught the 5700 level, which is below the 5750. But, you've got to get to 5750 before you get to 5700, and I should have caught that. But clearly the high open interest is what drug the market down to that put. But then it bounced back to my 5680, 5783 level. What is this? 5767.5. I think I had it on 5783, and then I brought it down a little bit. So yeah, but it's all good. We, can train the AI models to look for these things, and that's what we'll need to do is just be more careful to confirm that the high open interest was, put inside um, the report for anything inside the daily threes. So even though the market wasn't, technically within the R-vol, H-vol complex the way that the AI agent did it didn't think that the range was going to get past daily two. And I didn't either, frankly, but we did come back to the daily two. And that I think is the most important thing. We just got that little bit of extra. So here is what's shaping up now. We had that 6-month one that's holding price. I thought for sure with this big bull bar that we were done. that the market was going to, float up until the end of the month. Their risk, clearly was overshot for the month. And why risk anymore coming out of their portfolios? So I thought, surely we're just going to drift up. And then the twos are the logical place for them to come in, 68% of the range. It makes sense, right? So, but here we failed at the 6-month quarterly ones. And I did mention this in this morning's market um, pre-market report. The institutions trade the quarterly ones. And even though the options expire like last week, the calendar quarterly one is right there, and they're using our levels for risk a lot of the times as evidenced by the empirical evidence of our, you can just see the bounces and the market adjustments at our, the hedging at our lines. They sure did hedge that quarterly one and closed dramatically below that 6-month range again. So to put this in context for you, it has been a very long time since the market has been below the 6-month one. Um, and it's concerning. Let me see if I can put some more data on this chart. Put 10,000 days on here so we can get a little bit further back. Just increase the number of days on your chart for your data stream, and that way you can go back in time and see past distributions. 6-month is a big distribution, so I'm not going to get a lot of 6-month periods, but I can get a few more than one. Hang on 1 second while this calculates. But yeah, I think we're seeing a rollover here. You see that price is below the 200 EMA, and we could be rolling over and marking the market down just a little bit, which, sort of makes sense. What happened to my data? Where's my charts? Oh, put another 0 on here. Sorry. Come on. You see the daily one reached the daily 3, so the R vol hit the H vol a little bit over. Come on, come on, come on. I just have too many charts open, is the problem. And another thing that threw me just while we're waiting for this to load, the slope of the distribution sort of gave me the illusion that the ranges would be managed better, that we wouldn't get that breakout. That downslope, I really did think that we were going to, hold that risk. All right. So a 10,000 day distribution is a little bit higher than the 3,000 day as far as this bottom of that 6-month one. But you can see that we have, oh, it's better. This isn't as bad. When I put a 1,000 day distribution on here, a 1,000 day or excuse me, a 3,000 day distribution, and I can get it is not as it's lower. Hang on, I'm going to show you. So when you add multiple days to your chart, right? So you see it, I default to 3,000 days. So let me add this. Give it a second. So this is interesting. I'm glad that we went through this exercise. Um, and I'm sorry it's taking so long. I just have too many charts open. I should have closed everything down before I tried to do these large calculation ranges, but it's going to be worth it because this is going to give us that spread between a longer historical time frame and the current volatility. So in essence, I'm getting the spread between R vol and H vol for the 6-month calculation by doing it this way. All right. So I'm going to add another 6-month distribution. I'm going to add it to let's just make it pink so we can really see it. So it's going to show you that we went from support to resistance on the 6-month. It's very interesting. Just by shifting the number of days in the calculations for our daily ranges on a normal daily range that we calculate quarterly or monthly distributions, we use oh, I didn't put it in screen one. Hang on one second. This is extremely interesting. Oh, I have it in panel one. Where's it at? It didn't print. All right, so there's something wrong. I let me fix this and I'll post it later for you. I have too many charts open to try to figure this out. But I'll post it later. I think what we'll find is it's going to be way up there. And then we came down here to the 10,000 day distribution. That is interesting. But anyway, I digress. On a normal, just a normal daily distribution, the 3,000 days, it works very well as an anchor to run our calcs off of. And you can see here that we went down to the lowest monthly two out of all the, 4 weeks or 30 days or trade number of trade days in the month. So this is the monthly one on the close, 20,066. So we did have support there also. So that is really going to be support for a while. And yeah, my charts are all messed up now. I have to fix this. But yeah, I'll post that chart later for the 6-month distribution to show you. Um, we're at some dangerous, places. This is going to have to bounce and continue going up, or this market is just going to tank and flush out to these lower monthly threes, 5688, and then possibly 54, 62, 5500. So we've got how many more days? 3 more days in the quarter, 3 more days in the month. So I guess the question for them is they've already lost so much on their portfolios, does it matter at this point? Flush it out now and then let um, April go up? Because I think myself and everybody else, I listened to some other economists this morning who were really inclined with my thinking that we were going to drift up into the end of the month and then sell off going into April OPEX and then back up for the rest of the summer. We're all expecting that summer bounce because they're going to be lowering the interest rates and we're going to be starting to see the production from the manufacturing and everything kick in and the economy stimulated with prospects for growing GDP. So this last little, or this today's drop came out of left field. I think not only for me, but for several other people. So always have a plan B. Um, our plan B was we recognized that the pattern was and a possibility, and it did happen, and it didn't break the daily three. It broke through our daily twos, but corrected only because it went down to the 5750 high put wall. And I think 5,700 is definitely on the radar now, um, if not lower, 5688 or even lower. And that would be 5661 or potentially 5462. That would be quite dramatic, but it's there. We're at 624 points on a 583 quarterly range, and our daily range is running. Come on, computer. I'm going to have to start closing some of these charts. 108 points. So potentially 300 points. Let's see if I can get this opened. And we're right there. Look at that. So if we were to get 3 100-point days, we'd be there. Look at that. All right. So I'm showing you that it's a possibility. And I'm just curious. Let me pull up Quick Strike real quick. So we have 5,700 is the high put for our intraday volume. And for our open interest, that was, this is the wrong contract. Hang on one second. Let me put this over to the end of the month. EWH5, yep. Do this again. All right, so 5,700 is still the put at the moment. And 5650. So they don't have 5,400. They have 5650 right here. So this 5660 is on the table. $57.50 is the mean for the end of the month contract. So really $56.50. That's what we're pricing in. $56.50. $56.60 would be our which one is this? I just always like to look. 12-week one. All right. 5,700. You saw it, is the end of month mean. Oh, sorry, 5,750 is right where we are. Okay. So let's see what happens. But I certainly, got fooled with this big bull bar yes the other day, and especially with that little close that held the price. So I guess once 57.95 broke, it started tanking. That was right here at our, yep, it was right here at our daily level. Our daily level broke at the same location as our quarterly level. So that broke the risk and it flushed. Okay, that makes sense. You see that? The daily one confluenced with that quarterly level. All right, so a little bit of a drama today, unexpected, and we'll see if we can get any follow through going into end of the month. Maybe they think that they've already, blown their portfolio monies and they're hedged, so they don't really care, right? If they're hedged, send it down so they can make more money. Okay. We are in a put spread, so I'll take a look at my put spread and for that 57.50. In fact, let me look at it right now. 56.50. Oops, I didn't get it low enough. It's only at 5,700. I need to drop that down. I'm gonna have to adjust that. So I'll get that adjusted tonight. 5650 and 5800. So I can do that right now. Okay. 28 2681 in premium. There we go. Let's see how we do. All right, guys, y'all have a great night, and we'll see you in the morning.